Hello everyone, welcome back to another video. In today's video, what we're going to discuss is how we can use volume profile and even footprint charts to actually spot reversals or even understand whether the market is going to be in a range or not. So we'll understand some concepts of volume profile which are also applicable for footprint charts, because in the end the volumes that are being shown over there also albeit in a granular level. So let's start with the basic concept that I'm going to demonstrate today on the charts. So the first thing is, when you are experiencing a new day, you have to understand the what has been happening in the previous few days. For example, if it has been ranging in the previous few days, then and the daily profiles have been something like this. Now when it breaks, when it is somewhere here, generally on the first attempt it doesn't break. It's not a rule, but it generally, that is what is happening most of the times. And that is how the markets move, and then it eventually breaks down. Now there are two things that happen. Keep discussing this even in volume market profile, which is also applicable in volume profile and even in footprint charts. Now when you break a range, there are two things that can happen. Either it continues. Now if this has to continue, it will be a really fierce move, because it has been holding for a couple of days or couple of sessions or 3 sessions before that, and then the move continues. The other thing that generally happens is it goes down and it starts stalling, and you see some sort of a B profile or a pullback after this profile, and it enters back into the range. When this happens, this is a very good opportunity, although at this point it might seem that the market is really negative. But if you go and see all the profiles, which we'll just see in a moment, it generally ends up here. Okay, in 1, 2 or 3 sessions it will go to the other end, and it will give you a very good risk reward trade or a swing trade. The other, if you're skeptical about this, is the other thing to do. Sometimes the market is really ranging, so it will go only up to the 50% point and come back, hold around here, then go like this and so on, and take 3, 4, 5 sessions to reach the other end. So during markets like that, you can target the 50% range. Now moving on into the intraday level, we'll just discuss this day which we had over here. Now when something like this bar happens, okay, the first bar, that is a big bar, there are two outcomes of this. Either it continues and keeps going down, first forms a node, some sort of a node over here like that has been formed, and then continues down, or so the profile will look a very it will be a really thin one, something like this. So you'll have one volume node here, one volume node here, and maybe a double or triple distribution and a proper trend to the downside. The other thing, the second scenario that we can see is a B profile. That is, when we have this opening bar that is this big, what we'll have is it goes down and it stalls. Okay, and there's a B type of profile, so it goes down, it comes up, and it stays here, and there's a huge chunk of volume node that is formed here. So this becomes important and a carry forward volume profile point of control for the next day. We'll just discuss that in a moment. And the last one, the last option which we just saw over here is it does go down the first bar, and then it stalls, and instead of forming a B profile, it just recovers everything that has happened during the first 1, 2 or 3 hours. Now some will call it IB range extension, that is initial balance range extension to the other side. But rather than waiting, it's a good way to judge it. This is the initial balance high and low, if I'm not wrong. So rather than waiting all this while for it to break and take a trade, that is this one, you could have done it a lot earlier if you knew concepts of volume profile other than initial balance. Initial balance is a good tool, but you can do it a lot faster. Now what do I mean by that is, when you are seeing, now let's move on to the nodes that are forming, and they are of real great significance in understanding what can actually happen within the markets. Now when this node is happening, we'll do a replay of the chart so that we understand better. When this is happening, the nodes that are forming, why it is going down, we'll just see. So there's one node that immediately forms somewhere here, then we come somewhere here, and then there's a node that forms somewhere here. I'll just replay the chart so you can understand better. So during the pullback, if one node has been, that has been formed, and the market has started auctioning above it and has started taking support over that node, there is a very high probability that it is target one will be the high volume node above it, and if it breaks that, it will keep doing it for every high volume node above it, or will keep forming the volume nodes above the lowest volume node. So this is also called in other terms the shifting of value area. Now you don't have to wait for the entire value area to shift on top on the chart. You can see it live, that is happening in the markets, and it will give you a good idea. So what I want to explain, I will just replay the chart so you can understand better. So we'll start with this day, okay, and I will just tell you what I mean. So this is a 3-minute chart which I'm replaying, and I'm using so the platform is Go Charting, and I'm using 1 second time interval per bar time interval. Now if you see over here, I will just pause it for a little while, okay. Now what I was trying to tell you is, this is one volume node that has formed, okay, and this is the other one over here that has formed. Now if I expect the market to hold over here, the first thing I expect is this volume node somewhere here to hold. You can call it value area low, but this is another node, the lowest node that is there for this day, prior to which the market just took a good bounce off. So you can see that someone has certainly stepped in here, and they have devoted a lot of volume at this point. So what I want to see is, when the market approaches this point, it gives me some indication that it is going to go up. So my first target, as we just discussed, is this volume node just above it. So I will just continue with the replay, and so that you can understand what I'm trying to tell you. So now let's see what the market does. There's absolutely some people are aggressive who take a trade right here when it breaks out, but it's better to wait and let the market give a confirmation, because more often than not there's always a pullback. So you see there's another node that is forming here right in front of you, and the market is not ready to break this. If you see this is another node. This was one node. Now this volume has exceeded this one, and the market has not been able to break this. So this is another clue that there is some kind of strength in the market as of now. So let's play and see what happens, and if that node holds, see what happens. Now over here, once this node starts holding, either you could have entered somewhere here and a stop loss of just this one, and if you're not comfortable, it is fine. So the other node that is forming up here, and it has shown you some strength, is these 2 points have shown you some strengths that the market is not ready to go down, and this is the node that it is just crossed away. So when we are trading profiles like this, so what we are looking at, whenever a node is crossed, we either target the other node high or the low volume node, and when it is reached somewhere here and it is coming down, and when it starts going up, this is where we enter our trade. This is a very granular level which has been happening on this day, and target firstly this point or any other volume node that is above this. So let's move on and see what happens next. And now, since it has crossed this, and there is quite a bit of confirmation that the market is turning a tide, so what we have to be careful about is it doesn't turn into a B-type profile. So I'll just explain that also, how you can spot that, or how you can increase the probability of not getting stuck in a B-type profile. That is, it goes from one end and then tests the other end. So if you're planning to take a long over here on this somewhere near this POC, you don't get stopped out. So we'll just see how we can confirm that a little later on. So let's move on. So now our trade entry becomes somewhere here. after this volume node has formed. So this is literally at every step the volume has been shifting higher, the nodes have been shifting higher, although the highest volume is here, but you can see proper type nodes forming here. So we see so much strength that there is absolutely no pullback that is happening, and so whenever it comes here we have to be ready to take a trade, because the market is showing a lot of strength, and in all probabilities now it's going to break the high of the day. So this is our entry point now. So you see the node that is formed here, and what we target up is now the high of the day, because this node below will be our stop loss, because these guys are going to be taken out for sure. And now you see the other node that is formed here is somewhere here. So if the market pulls back to this place, it could be either you could add or take another trade and see what happens. And now similarly, this is a node that has formed here. I'll just pause it. So you can see in steps how the nodes keep forming. So the next node that has formed is here. After you took a trade somewhere on this node, the next node formed somewhere here, this next node has formed here, and there's so much strength that it keeps breaking. Now this is another entry, although it is really late in the day, but you can always try your luck, and your stop loss would be just this much, and you target again the high of the day to be taken out. And let's see what happens after that. And let's start this. Okay, so this is how you trade your nodes within the day. See, you can see how it breaks down. Now the other node that has formed over here is somewhere this place, and you have to wait for a pullback to this level to take a trade. So obviously there is some sort of support that again happens here, and you can see, and the stop loss will be somewhere here, this low volume node. So but this was really late in the day. Now how do you carry forward this to your next trading day? Now if the move, all this up move was really genuine, so firstly this node and this node should hold in the next day, that is after 1:30, whatever move has happened, these nodes should hold. If it doesn't, generally after a trending day like this, I mean a steep reversal like this, what you will see is the market hovering around in this range. So what you have to play is all these areas are nodes are carry forwards for you for the next trading day. If the market is generally, I will just tell you something more about the profile in a minute. So if the market is generally in a bullish swing, what it'll do is it will just take off from here. So any move above this is a buy, and to the high of this profile, I will just tell you that. And if it does move down, this is another place where you can find a trade up to this node, and the stop loss would be again this one, the low volume node of this place. So this is how you can actually play out volume profile nodes and volume profile during the intraday, and it is a really powerful tool and it helps. Now one more thing that I want to show is, now these 2 days might seem similar in the sense that it goes down and comes up, but it goes down and stays in this part. Okay, so if you play the charts, you will see something similar happening, although the volume profile POC is a lot lower over here. Now in this, contrary to this, the nodes were not shifting up during this start of the session. I will just show you this as well, so that you get a fair idea of what I'm trying to tell you. Now let's play this chart, and you will see on this day, as you see, the nodes are shifting down rather than shifting up. So whenever for instance this is a node, you can see the nodes are shifting down. We have to see a move above these nodes to take any sort of trade. So this is the node that we're looking at. Now when this pullback happens at this node, you see at every point of time it is not giving us any confirmation whether this is going to go up. So now this is the node that is left. So whenever it comes next, either if you're aggressive enough, at some point this place you can take a long entry with the stop loss of the day low, and you would have got stopped out. So you can see the other then entry that comes is, now this node has formed. Any pullback to this place is your entry somewhere here again. Okay, and stop loss is the day low, and you target the other node over here, and let's see what happens. And you do make it, I think, and this is what happens. So you can see that the node placements are shifting down. So on a trend, on a day like this, it is always better to trade the extremes, as in when it goes on top, you would rather find a pullback. There's another way of knowing this. So it does touch this volume node and comes back. So you see the difference. it breaks out eventually, and now there is a node forming. But what this does is we are waiting for a pullback to this place to take any kind of long entry over here. But you can see what the candle does. So even if you take a long entry with a stop loss here, I think you will get stopped out again over here. I just we'll just see what happens over here. And now what I want to you to understand over here is that this day you have to keep in mind is going to be a B type shape. So it is always better to trade the extremes after so it keeps hovering around here. So even though it does go up to this level with a stop loss of this, but this is not a, I mean, I wouldn't consider this a very good trade at this point, because what we're expecting is a B type profile over here. So that is, I'm expecting something this like this. So it is going to go to one extreme. I need to find sell trades and buy trades in these extremes. Why do I say that? I will just demonstrate to you. So for this we will go move to the footprint charts. Okay, now this is the 14th August day. Now when the day opens, is the same thing like we just saw. That is, there's a big bar on the downside. Now on the footprint charts, why I have opened this chart is it is granular in we get granular I mean details that are granular in nature. So the first thing I see here is the same concept that I was applying in volume profile. I am going to apply here. So this is one node. Okay, this is the first bar node. Now whenever this bar node is broken with confidence, or I mean it should not pull back like this within the same bar and it's broken, I can be assured that the move will be to the other side, because all of these guys are going to get trapped. Okay, which we just saw on the volume profile. So this is the 14th August, that is Monday. Okay, and the finally when we just saw on the volume profile, it takes off from here and it goes to the other direction. Now compared to this, okay, what I have seen over here is, on the other hand, is if you see the first 5 minutes bar and a lot of chunk of volume that is associated over here is somewhere here. Now this is what I want the market to break, 19,555, for a move to the other side into the last day's profile. So what has happened on this day in fact is that if I just zoom it out, it has taken a rejection from here and gone down. That is where I start getting a hint, and it is already 1 p.m. so I start getting a hint that it is going to be a B type profile and the market is going to go to the other side. Although we did find one trade here somewhere here, which we discussed in the volume profile, targeting for this node. It almost reached there and then it turned back. But I wouldn't even though this trade is legit, I wouldn't take this one. I would rather take the extreme end for this one on this day, being a B profile. And how did I judge that? It is by way of knowing that there are, this candle which had a large amount of volume. If you see on the footprint chart, the POC of this candle, or the volume node of this candle, hasn't been taken out, and it is continuously rejecting from that zone. So whenever it turns up here, obviously there's going to be a rejection at this point as well, and it is already 2:30. So for the market to break, it was very, very unlikely. So you take the opposite end trade. Now let's move on to the profile charts again, and I want to show you the expanded version, and let's take out the candlestick charts. So we will just understand what I wanted to tell you. Now when you look at this profile, why I tell even during intraday trading you need to have an outlook of what can happen and a bigger picture is, I will just tell you why. Okay, so the last is not turned up. Let's switch this off, and it has come. Okay, so if you look at this chart, so let me get this tool out. Now you see that this was a range that was forming in the previous sessions, and this is the range that has been forming. So now what I was telling you is, if it breaks and doesn't continue the range, obviously at this point we didn't know what the range was, and it breaks and it comes up. Now on this day specifically, it has broken and in fact gone just below this range, which was over here, you can see, and formed a POC and moved back up. Okay, and it is almost traded back into this range. Now this is exactly what I was telling. Now if the market holds this POC, okay, this one somewhere close to 474.80, and you see on Wednesday something like this happening, you can very well target 600 and even 700, and 50% will be somewhere around 600. The first target becomes this, because this is called look below and fail, and our next target would be somewhere here. So you can see within this range, although it might look a lot bearish, the news would be bearish, but this is what happens if I mean, a lot of guys get trapped and it gives a fake to the downside and moves within the range. The obvious target, the destination trade, becomes this and this. So this is a very likely, probably I mean, likelihood of happening on Wednesday, if we start trading back into this range. The first target becomes this day's high and then this POC, and obviously the 50% becomes our next target. So if you see something like we just discussed, any auction that doesn't even break below this, we can expect a move up to 600 within a day or two. So this is how you can use your profiles and even footprints on a granular level, and take good trades and understand the nodes that keep forming and trade them. So hopefully this video was of some use to you guys. Until next time, bye bye.